The first half of 2022 has been nothing less than a roller coaster ride for the equity markets. Markets world over have been on the edge on concerns over high inflation, aggressive monetary policy tightening by central banks, and disruptions in supply chains caused by the Russia-Ukraine war, as well as the COVID outbreak in China. The Nifty has dropped more than 7% in the first half, and the broader markets have suffered deeper cuts to the tune of over 20% during the same period. But this hasn't stopped domestic mutual funds from being gung-ho about the second half of 2022. The latest edition of the Moneycontrol Market Sentiment Survey indicates that most of them expect the benchmark indices to give positive returns at the end of this year. Of the 11 fund managers surveyed by Moneycontrol, 10 said that they expect the next 6 months to provide positive returns. This shows that the sentiment among money managers has become more bullish, as only 54% of them were expecting positive returns in the June survey. Now, most of them are of the view that recent correction has made valuations for Indian equities more reasonable. Interesting to note that the majority of the fund managers surveyed believe that the mid and small cap stocks are now the most attractive segment of the domestic stock market for a 24-month horizon. Now, this is in contrast to the previous edition, where 73% of the fund managers said that they would be deploying incremental funds into large cap stocks. The optimism for the domestic market among fund managers is largely driven by their confidence in corporate earnings. Despite concerns over high crude oil and commodity prices over the last 6 months, fund managers expect corporate earnings to grow 10 to 15% for the third consecutive survey. Now, the recent decline in global commodity prices has strengthened investor optimism that corporate earnings will be able to survive any slowdown in global economic activity, and margins may see a recovery in the second half of the current financial year. Now, majority of the fund managers still see financial services companies as the most likely outperformers in 2022, despite the Nifty Bank Index giving merely 3% returns so far in 2022. Now, metals and commodity-focused companies remain in the top of the list of sectors that will deliver negative returns in 2022. The Nifty Metal Index, remember, has already fallen 7.3% so far this year. Fund managers are also expecting the RBI to be less aggressive on interest rate hikes going forward. The majority of the surveyed asset managers expect the central bank to raise rates by 75 to 100 basis points as against 100 to 125 basis points that was being penciled in the month of June. Money managers also expect the rupee to stay below the 80 per dollar mark by the end of the year, despite the recent pressure on the currency. The rupee has depreciated more than 7% against the US dollar in 2022, driven by concerns over inflation and persistent foreign capital outflows.
It's rare to find news and insights tailor-made for you. For clutter-free content and value-added insights, India's #1 financial news destination, Moneycontrol brings you Moneycontrol Pro, an ad-free premium service that offers its subscribers curated market data, feasible investment solutions, exclusive noise-free information, independent equity analysis, and sharp opinion. Moneycontrol Pro, India's fastest growing subscription service, has offered valuable content to subscribers in sync with their interests and demands. We are now a family of over 500,000 active subscribers, consistently helping our users on their wealth creation journey and enriching their awareness around business and finance. We are grateful for the continued support of our loyal readers and subscribers for making Moneycontrol Pro an undisputed leader in its category. And if you are yet to experience the rich offerings, subscribe today for a seamless, uninterrupted access to a gamut of business and financial information. Be a pro with Moneycontrol Pro.